Hello and welcome to BQ Prime. You're joining us on this special conversation with Mr. Sunil Mehta, the chairman of Yes Bank Limited. Of course, Mr. Mehta was brought in as the chairman of the bank back in March of 2020 when Yes Bank was going through a period of reconstruction after a serious financial problem started showing up at the bank. A little over 2 years later, Mr. Mehta is preparing for an exit from Yes Bank now because the bank is going to propose a new set of board members to its shareholders at an upcoming AGM on the 15th of July. And after that, the bank may look at raising some money from a new set of investors looking at growth capital at Yes Bank. So, Mr. Mehta, firstly, welcome to BQ Prime and this conversation. Thank you so much for joining us.
Thank you. Thank you. It's a pleasure to be with you.
Sir, March 2020 to now June 2022, about uh, about 2 years and about 3 months or so. What, to your mind, have you managed to achieve as a wartime board, if I may put it so?
Well, if I were to characterize it in just 4 to 6 words, when we took over in March 2020, Vishwanath, it appeared like mission impossible. And when I look back in now in June 2022, it is mission accomplished. So I think that's really characterizes as to what this board and the management has done to the bank over the last 2 years, 3 months. It's been a phenomenal journey of taking a deep dive when we were asked to take the responsibility as the board under the Reconstruction scheme with Prashant Kumar as the CEO. And of course, we had two nominee directors from SBI and two directors nominated from Reserve Bank of India. And the interesting piece was that we didn't know each other. We were just sort of put together. We had a chance to sort of briefly meet each other just before the COVID onset, the COVID lockdown started. And the first board meeting, which was on March 26, 2020, which we thought would be a physical meeting, had to be a 9 hours virtual meeting. And this journey of entire reconstruction from the board's perspective, for 2 years, we didn't have a chance to shake hands with each other. And we've sort of done this on a virtual basis. And I think it's been a remarkable journey of dealing with what we initially thought of identifying a set of issues, setting up key priorities. Liquidity was the main issue right at the beginning. And getting that liquidity back and the confidence of customers back was of the most important aspect that we had to deal with. We had a 50,000 crore short-term facility from the Reserve Bank of India. We very well knew that we had the responsibility to repay that same by September of 2020. And we started sort of doing whatever was necessary to make sure that our fiduciary responsibility in meeting the obligations to RBI and all our stakeholders was met as per the timelines that had been given to us. So there are many different facets to this in terms of, as we look back, the aspect of, as I already mentioned, about the confidence that had to be established with all our stakeholders, most importantly from our customers and employees. And the second piece was also to make sure that we look at the long term and whatever changes that had to be required from a governance, risk management practices, compliance, and from a business development perspective as well, because we had to grow. It wasn't just sort of getting the liquidity in, but we also had to show profitability quarter on quarter. So these became all our priorities. We also realized we needed capital. And in July 2020, which was about 4 months after we had sort of been put in this reconstruction process, we had to raise capital. And we did what was at that point of time seemed a very difficult task of raising 15,000 crores in a period which was completely um, um, had an overlay of COVID, of business uncertainty. There were macroeconomic issues involved itself. And to be able to sort of take that leap of faith and go in and raise 15,000 crores in July 2020 was, I think, also a remarkable decision of the board.
Hmm.
We were successful in doing that. And I think kudos to all our investors who sort of took a leap of faith in this bank and the story that we had actually given to them, that this is what we would be doing to protect their investments in the bank.
Okay. Coming to the investor, I mean, you've laid out a few threads there for me to look at. So let me come to what exactly it is that I mean, specific issues that we were discussing. First one with respect to the investors who came in July of 2020. I mean, you already had a set of banks that had come in March, and then a new set of investors joined in. Now, for a lot of the people who came in during the reconstruction plan, there is a 3-year lock-in that was presented at the point in time, which will end in March of 2023 now. What is the sense that you're getting from these investors, from these banks who had participated in the reconstruction, including one non-bank that also participated in it? What is the sense that you get? Are these investors just looking to now probably liquidate that investment that they've made because whatever they set out to do has already been achieved, or are they looking to extend that that partnership with the bank?
I think, Vishwanath, the most important thing that first is that all these banks who came in at that point of time in March 2020 really sort of looked at it as a long-term investment, as a 3-year investment at least. And they also had the sense of confidence that whatever needed to be done under the reconstruction scheme, they had that expectation that it would get accomplished. And we worked very closely with the investors and kept them informed of the developments. And I think that sense of confidence that is sort of was required to be built has been built with them. And the further infusion of capital, which we did in July of 2020, gave them added comfort that there is much more investor confidence. The share price of the bank has sort of been reasonably kind of stable at a certain level, which is already sort of yielding a reasonable return to the investors who came in at 10 rupees. And I think the most important thing is that the bank will go through the inflection point as we are going through now, which will give everybody the confidence that over a longer period of time, this bank is well set to grow from here. There were important issues and priorities that we had to deal with in the beginning, and I think those have been dealt with. Now it's really embarking on the growth path from here. So when this period of 3 years that gets over in March 2023, the lock-in period, most of these investors will make their own determination in terms of whether they want to stay and grow with this bank over a period of time, or whether they need liquidity to be able to divest and sort of liquids and create some liquidity for whatever investments they have patiently held so far. So I think each institution will make its own determination. And I expect that the way it is done, it will sort of ensure that there is enough stability and that it is done in the way that sort of does not in any way, kind of create a negativity on the share price over a period of time.
Okay. Let me also ask you about the fundraising at Yes Bank. So now there was a plan to raise another 10,000 odd crore that has been going on for about a year or so. I'm not entirely sure where it stands at this stage. What do you think will happen? Is it likely to move on? I mean, is the responsibility to bring in that investor now going to fall on the new board? how far are we from the bank raising that amount of money?
So the ability to raise the next round of capital, it was imperative for us to create the alternate board.
Right.
Because any investor who comes in as a financial or any strategic investor will look at certain governance rights, and that can be only enshrined in the articles as whatever is agreed between the alternate board and any investor coming in. So it was an imperative for us to move from the reconstruction scheme and move into the alternate board. So, and it'll be, investors have shown interest. They've sort of had some initial discussions. They are expressed their strong desire and keenness. But I think the aspect of that, the alternate board formation was most critical. That is what we are now sort of going through. So once the alternate board is formed, then the alternate board will have the flexibility under the local rules and regulations to be able to make whatever necessary changes that are required to enable fresh investors to come in and agree with them whatever should be the right structure as far as that partnership with the new investors is concerned.
Do you think that the sale of the stressed portfolio, which is being pursued by the bank management as well, that is critical? It's crucial for this fundraising to take place.
You know, as far as the cleaning up of the balance sheet was concerned, this was expressed by the bank that we would do this much earlier itself. That we would create a ARC partnership and with a very well-respected name, and then move these stress assets into that ARC joint venture. And we've also been in engagement with the Reserve Bank, keeping them informed about the developments as well. So this was the way we looked at it was that we need to sort of move out all the past legacy stress assets and have a clean balance sheet that we can sort of then grow from there, and not having the management bandwidth being spent on a significantly large stress portfolio, which we had inherited. And the good thing is that over the last 2 years, we've had some very, very good track record on recoveries itself. So that sort of provides the comfort level to whoever is coming in that this portfolio is, there is potential for recovery from this portfolio itself. So once we've got that done, and we are hopeful that it can be accomplished by September, if not earlier, or September of this year and not earlier, then I think the bank is on a very good wicket to have a very clean balance sheet and move ahead from there and focus on growth itself in a very competitive market environment.
How soon after that would the investment be targeted?
That's the responsibility of the alternate board.
Of course.
They will, as they sort of look at it from a business strategy and the requirement of a growth or buffer capital that may be depending on the macroeconomic situation. I think these are important elements that the alternate board will consider and take a decision on that.
What's probably the one thing that you wish you could have done in these 2.5 years? Is there anything that probably was there on the priority list but just didn't make the cut because so many other things were happening?
Wow, a tough one. I think whenever you're sort of given a task of this nature, and particularly when we were given this task, we had this overlay of the COVID situation. I think there were so many moving parts that we had to deal with that it was the liquidity, capital, regulatory compliances, people issues, motivation, morale, customer confidence, business growth. All of these had to be done in parallel. And could we have done some more better sequencing? I don't know. It's tough to sort of argue one way or the other. We tried to sort of put all the priorities in place and deal with all these, juggle all the balls at the same time. And I think the chemistry at the board, the strong commitment of the management team, the confidence that came in with from the customers itself helped us catapult into a fast forward stage. We'll also be able to sort of get profitability back into the bank. Very difficult to say what could we have done differently. It's I think the speed at which we were able to move things forward, could we have done it faster? It's I think somebody else will make that evaluation.
Yeah.
And will sort of be make judgments on us. That was there anything that we left out? But I would sort of leave that judgment to the stakeholders who are out there looking at us.
Okay, last couple of questions. So FY22 turned out to be the year where you made your first full year profit after the bank was put under the reconstruction process. Is FY23 and 24, I mean, according to your independent assessment of it, as long as you're still with the bank, is your assessment that this is now the base and now we need to build on top of it? Or could there be surprises from the balance sheet that may come up in the future?
I think we've sort of been able to make a very solid base. Unless the macroeconomic environment sort of completely takes a U-turn, I wouldn't say that we expect any surprises from the balance sheet itself. Incrementally, whatever assets have been added have been very good quality assets. And we've been very watchful on that front itself. The bank has historically had certain advantages, I think predominantly on the technology side. It's the kind of strides that the bank has made now and perhaps earlier as well on the entire aspect of to create a digital bank has been phenomenal. And on the retail side, we had our corporate to retail portfolio on a 60-40 basis. 60 was corporate and 40 was retail.
Yeah.
We've been able to turn this around completely to 40 corporate and 60 retail now. And we thought that we'll complete this at the end of this financial year 23, but we've done it now itself. So a year ahead of time. So from here on, the strategy of the bank to sort of move on retail and the MSME and small and medium enterprises and kind of reduce the bulky corporate exposures and move with high quality credits from here on will hold the bank in good stead. Number two, the management team itself, we had obviously challenges right in the beginning, but over a period of 2 years, we've been able to turn that around and also now started attracting good quality talent and of course, keeping talent at home itself. And there is of course, market attrition that happens and that's bound to be in any financial system.
Yes.
So, but I think we are completely ready to sort of move from here and get on to a much more stronger momentum of growth. And I really have to sort of say that the kind of work that has been done to establish this foundation, it is on a good, solid foundation. And I'm keeping my fingers crossed that the macroeconomic environment, as I said, stays steady. Yes, there is, we will have some turbulence down the road from here on, but the bank is fully ready to deal with that turbulence as far as the macroeconomic issues are concerned.
Lastly, what will you take to your next assignment from this one?
Good question. Well, having spent considerable time on institutions that I have learned a great deal from, apart from my own practice as a consultant and advisor under SKM Capital, being on the board of State Bank and being on the chairman of Punjab National Bank, and now having in a month's time, I'll be completing my term with Yes Bank. I think the learnings are phenomenal, Wish. It is, I have to say with all honesty, that the kind of experience that one has got over dealing with these institutions and being able to at least turn the needle a little bit has been a phenomenal one. And I would encourage more and more people to look at these possibilities and not worry too much about aspects, what is called the risk reward. When you're thrown in the deep end into some challenging situations, if you can make some change, which is a positive change, I think that's really the biggest satisfaction that we get as professionals. And with whatever we've learned, if we can do some more and create some more positivity in the financial markets and add value, I would be I would sort of put my hand up for another challenge.
All right. Thank you so much, Mr. Mehta, and all the best for your next assignment. And thank you so much for watching.
Thank you.